e-commerce is now their biggest store. This must have been a big wake-up call for the luxury sector as a whole, and a big test, the rate at which they could switch to that channel.
Absolutely. This is a sector, unlike others, that has been a little more reluctant to embrace online out of fear that the channel was not entirely suitable for high-ticket items. The pandemic has completely blown that thesis out of the water, and it's amazing how many management teams have acquired religion when it comes to the subject of e-commerce in the luxury sector now.
So are we going to see the houses that work e-commerce the hardest do best? Or, why is Hermes, for example, a standout performer?
I think the reason for Hermes' success go beyond its embrace of e-commerce. It is that it's a very supply-led model, where essentially, because of their long wait lists for their core iconic products, similar to Ferrari, they pretty much sell everything that they produce. And so that is behind its unique success. For the rest of the sector, there's a long runway of growth here. On average, the luxury sector earns about 12% of revenues from the e-commerce channel pre to COVID. Of course, we've had about 5 years worth of online penetration occur for the sector in the matter of 5 months. So I think the opportunity ahead for e-commerce is significant. But as you correctly point out, it will further polarize the winners and the losers within the sector. There are some companies who are better capitalized, who will be better able to invest, and those that aren't, which will have to rely on, say, third-party wholesalers, which may not offer them the best returns.
I was surprised that I was reading a reference to handbags as I introduced you, Swetha, because I wouldn't have thought that buying a handbag, given what you said about Hermes, I know there's a different story there, but I wouldn't have thought buying a handbag at this point would have been top of people's luxury list, maybe home furnishings, or you referenced in your notes the casualisation trend in fashion, so some of that kind of clothing. Are those the areas that we've really seen for other luxury names? Are those the types of products that have been doing well?
Definitely, home furnishings is a theme that is recurring across the luxury reporting that we are seeing, which is consumers obviously spending more time at home. But there's another element at play as well, which is that for a lot of white-collar professionals, their savings have actually gone up, which has allowed them a little bit more of an ability to indulge themselves with a one-off purchase that they may not have otherwise done. And that, I think, also explains, despite the lack of sort of meaningful going out activities, the continued appeal of leather goods, particularly in core iconic brands. And I think that's why we're seeing this lead from brands like Louis Vuitton, Dior, and Hermes, and we'll have Kering report later today, which will be quite telling as well. But there's a clear bifurcation emerging between the brands in pole position and those that are probably going to be left behind.
So as we see new record infection levels in different European countries every day, how does that affect the outlook for these? Because, I can imagine well-heeled investors saying, I want a Birkin bag and I can now go outside, after lockdowns ended. But does the opposite happen when we get more worried again about COVID?
I think the key cohort for this sector at the moment is the Chinese consumer. They drive over a third of the luxury industry's demand. This year, it'll be significantly more than that. More importantly, they're driving virtually all of the growth for the sector. This is followed closely by the American consumer, and these two cohorts have remained quite healthy through the summer period, and early signs are that they're going to remain so for the rest of the year. If we look at Pernod Ricard's numbers earlier this morning, they said sales of premium spirits are expected to remain quite elevated through the end of the year. Europe is a concern, firstly, because the demise of long-haul travel, particularly from Asia into Europe, has bit into luxury brand sales in this market. The European consumer, however, interestingly, has shown signs of re-engaging with luxury brands after many years of a hiatus, which is what LVMH reported last week. And Hermes also today indicated that actually outside of the core tourist capital city stores, their engagement in France with French consumers remains quite high, which is an interesting point.
And what about consolidation? You mentioned LVMH there, and that's been much talked about, Swetha. How much of a theme is that?
I think that particular incident with Tiffany, obviously there's a legal proceeding underway. This is a sector that is ripe for consolidation. It's highly fragmented. If you look at the soft luxury sector, the top 3 brands have less than 5% market share each, which is why this gap between the winners and the losers is set to polarize further as we continue. And I think the next 6 to 12 months, now that these companies have sort of kept their powder dry, understood what it means to operate under the aegis of a lockdown, that this will provide meaningful opportunities for consolidation in the next 6 to 12 months.